Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Tag segment. We're taking a look at Dick's Sporting Goods. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of LikeFolio. Andy, thank you for joining us and kicking off this week with us. It'll be a shortened week, but let's talk about what you all are seeing when you look across sentiment as it relates to Dick's. Because when you think about the stock, it's been an underperformer so far this year and on a year-over-year basis. What's your take?
Yeah, we're starting to see a nice little divergence opportunity forming here. We think Dick's Sporting Goods has a very real structural edge heading into the holiday. They've got stronger traffic, a healthier customer base, and a higher quality in-store experience than any competitor. It really shows through when we look at Dick's Sporting Goods web visits versus the stock price. We've got the web visits up 31% year over year. At this point in time, heading into the holiday season, we see this as extraordinarily impactful and a very good sign of things to come for Dick's Sporting Goods heading into the holiday season, heading into Black Friday this weekend, Cyber Monday next week. And with shares trading lower, this is a nice divergence opportunity. We just think that Dick's is going to be able to get out onto this call and say things are going better than Wall Street expects and provide a pretty healthy outlook into the future. So where we're at right now, the acquisition of Foot Locker looks pretty decent. I don't think it's fully integrated yet, but this is a company that's executed at a really high level historically. And the Foot Locker data so far is reversing a pretty negative trend. So it tells us that Dick's is going to be able to take advantage of this acquisition and is starting to do so, and should have a pretty good outlook in this quarterly conference call.
Yeah, Andy, one of the things we've talked about this stock is the fact that a lot of their competitors have gone away, and now the acquisition of Foot Locker just takes another one away. If you want to actually shop for sporting goods without going to Amazon, where you actually want to maybe use it or touch it or whatever, you have to go to Dick's Sporting Goods now. It seems like, they're the 800-pound gorilla in the room. But the company said last quarter that they haven't seen any signs of slowdown from the consumer. The stock's kind of lagging so far this year. Is this a seasonality thing where we always see that big major pickup in your data going into the holiday shopping season? And with the stock down 9% so far this year, it provides that opportunity you guys are looking at.
Yeah, I think that there's clearly seasonality with their business, but when we look at it from a year-over-year perspective, it really takes seasonality out of it. And as we head into the holiday season, they're already at a 31% higher level in terms of web visits, which we have seen historically translate into foot traffic and revenue for the company. And so when we've seen these setups in the past where LikeFolio data shows web visits surging while the stock trails, it's been a really nice setup historically, 70-80% win rate when we get this type of setup. So we think Dick's is absolutely prepared to outperform expectations and provide an outlook that continues to be optimistic in the face of Wall Street's concerns.
But Andy, let me ask you this. One of the concerns obviously has been the integration of Foot Locker, because Foot Locker had been so weak and then their exposure to Nike had been challenging. So do you think that one of the key points that investors will be honing in on is how much or how well the integration is going with Foot Locker? And then what does the exposure to Nike look like from here? What's your thought?
Yeah, I think that's definitely something that Wall Street's going to have huge concerns about, a lot of questions about on the conference call. We don't have a ton of insight into that except to say that the Foot Locker data that we have looks better than we would probably expect the Foot Locker data to look at this point. The other thing that I would say that Dick's Sporting Goods has going for it is this youth sports ecosystem they've really built out with House of Sport, Game Changer, etc. They've built out a really nice network that brings young, sports enthusiasts and their families into the store on a regular basis. We think Wall Street's probably mispriced that action as well. So the digital side of Dick's Sporting Goods and what they're able to create in terms of network effect of their client base is starting to really pay off, and we see the Foot Locker expansion only adding to that because it's getting more and more people into that digital, ecosystem that they can continue to market to. So we really like what the company is doing. We think that they're going to have pretty good numbers and a good outlook from here.
Andy, you got an earnings score on this one because the stock's actually below where we were last quarter, where they actually raised fiscal year 25 estimates up. And the CEO basically came out and said every aspect of our business saw growth and did well that quarter. And now we're back below there. So what's your earnings score on this one?
Yeah, we're positive going into this. We think that the CEO's, what he's predicted and what he was saying at the time has absolutely manifested in terms of the data that we're seeing. So we don't see any reason why they would move off of that. I think Wall Street has, general concerns about the economy, general concerns about the consumer, but the Dick's Sporting Goods consumer seems to be thriving. And as a result, we think that this company is gaining market share and positioned to really benefit in 2026 as we move forward with hopefully a little bit stronger consumer overall.
Well, good point about the youth sports, because I know I've had to look at Dick's for cleats for my son. Thank you, Andy. That's Andy Swan, co-founder of LikeFolio. Appreciate that perspective. Now, for the trading perspective of all things Dick's, I'm going to yield the floor to you, Tom. Bring KG back in here to go over the insights from the LikeFolio team. Tom, your thought before you guys get into the example trade.